In this video, we'll learn about how to subsequently account for an intangible asset. So far, we have learned about what are the recognition criteria for recognizing an intangible asset, at what basis we should initially recognize it. But now, after recognizing it initially, how do we carry it forward? So, just like IAS 16 property, plant, and equipment, we have to account for it at either cost model or the revaluation model. And in this video, we are going to talk about the cost model. Now, cost model is simple. We have to account for it at cost less accumulated amortization and accumulated impairment losses. But there are some differences when we compare it to the IAS 16 property, plant, and equipment because of the difference in nature of the assets. We are dealing with intangible asset. And the first difference is that we are slightly less sure about the useful life of that intangible asset. And therefore, this standard says we have to review the useful life of the intangible asset every year. And because of that, we also have to review the impairment, the amortization method every year. So there's the first difference. We have to review the amortization method every year, and we have to review the amortization period every year. And the second difference has to do with the residual value of the intangible asset. Now, because there is unlike intangible assets, unlike property, plant, and equipment, which can be sold at the end of the useful life, for which there are markets, there is scrap markets or second-hand markets. But in case of an intangible asset, active markets are very less likely. So that's why the standard says that you cannot use a residual value. The residual value you would use would be nil unless the following conditions are fulfilled. The first condition is that someone should have promised to purchase it at the end of the useful life. If that is the case, you can use that residual value. And the second condition is that there should be an active market with reference to which you can determine the residual value at the end of the useful life. And you should also be able to show that that market would still exist at the end of the useful life of that intangible asset. So if you can show those things, you can use that residual value. Now, so far we have talked about an intangible asset for which we can determine a useful life. Now, what if an intangible asset has an indefinite useful life? Now, that could happen in case of a time-tested brand, for example, Pepsi, Coca-Cola, Ferrari, Canon cameras. All of those things, if an entity buys that brand, it would not be able to set a limit as to how far will that brand benefit that company, because that brand would be benefiting that company in the foreseeable future, because it cannot see any reasons as to why it would stop benefiting that company. So these assets are called intangible assets with indefinite useful life. And because we do not know the useful life of that asset, because that is too long, we cannot amortize it. And if we cannot amortize it, we will have to impair it more rigorously. And therefore, the standard says that an intangible asset which has indefinite useful life has to be tested for impairment every year.